What is up, guys? I'm back at it again with another Ripple update. You guys might be thinking, why does Alex sound so happy? Why is he in such a good mood? Well, because we're dropping in price, and we're the bear in this case. Why are we the bear? Because we clearly identified that we're still in a downtrend. And people that bought here, well, I don't know what to say. Anyways, okay, now since our short is looking very good, 1.55. So we started at over here, right? Let's just, even if you were to close it right now, so around here, right? Even if you were to close it right now. So made a solid 15% profit. 15% profit. That's huge. It's a really good profit. Anyways, okay. So now since the shorting post is going according to plan, we can now have more confidence. Be careful. It's not over yet. We still might bounce back. This is the cryptocurrency market. When I say we might bounce back, we could still go up. But because this is the cryptocurrency market, everything is highly unpredictable. But so far, it's been quite predictable. But never rule out the possibility of this going up. There has been many people that says or commented that another drop here is not possible. The drop here is not possible, and that I don't know what I'm doing. But I never rule out all the possibilities. I always think about all the ideas, and I think about the clues or the evidence that are required for each idea to be valid, right? So let's say 1.7, right? I'm gonna look for this level, $1.7. This is going to be a very important level, right? Because if we somehow manage to bounce from here and we pass 1.7 with aggressive price action moving to the upward side, then that would mean my lower targets are less likely to be valid, right? So you never want to rule out all the ideas. You always want to have an open mind and react to how the price action goes, right? Okay, now, so since we're already in a short position, let's find our buy zone. This is just a video update for our buy zones. Okay, so this is my previous Fibonacci extension target, and there's a top trader on TradingView called Wave Trader, top analyst, I mean. And I borrowed some of his idea here, combining with my own Fibonacci extension, and his target range is precisely is exactly the same as mine. So I would say we have found some sort of confluence, and I'm going to draw his idea out here on the left, and this is my idea right here. And I do agree with his analysis. So I believe we will possibly there's the chance that we reach these targets are better than 50%. I think. That means it's more than half the time. I think we're gonna dip back here. Okay, so why did we come up with these targets? Okay, so if we look at the if we ignore the waves, remember I say we can draw wave one here or wave one here, and that would drastically determine where your wave 5 will end, right? And because I believe this is wave 1, not this, I believe we will drop lower. Okay, so now let's ignore the waves. Let's just look at this downward channel. If we look at this downward channel, this is a parallel channel, right? And these blue lines, these purple lines, are identical. I cloned them. I copy and pasted them. So they're of the same length. They're of the same slope. They're exactly the same lines. Okay, so now we can see that the drops are occurring in parallel. It's quite predictive so far. And after our previous low a few days ago, we broke out from the right. However, I am so bearish. Ignore the waves, ignore the indicators, ignore whatever. Let's just look at the candlestick. We have wicks pointing to the upwards, so I still think we're in a bear. This is one evidence, one clue that shows we're in a bearish market still, right? And also, we do not have an aggressive rise, which is, yeah, again, in confluence with candles, with the upper tick. Okay, now, most likely, this will be a failed breakout, right? This will be a failed breakout. and we're going to continue to the downside. Oops. Okay, now, so there's one possibility that we drop to the upper trend line and we bounce back. This is why we buy a little bit here. Only 15%. Why? Because there's a possibility that we bounce back, right? So we want a position in this case. We want to be safe. But there's also a possibility that the upper trend line doesn't hold, which I believe it won't. But it's just my humble opinion. We have to see how the market plays out. And in that case, we will drop to previous low. And this is a very important point, price action point, because as I said, wave 5 doesn't have to surpass wave 3, right? It could be here. Well, wave 3 cannot be the shortest, so let's do it like this. Wave 5 can be here, right? Or it can be here, as long as wave 3 is not the shortest, right? It could be here or here. So this is basically what I'm trying to tell you guys. Wave 5 could end here. If I think this is the end of wave 3, if this point is the end of wave 3, then wave 5 can end here. Same level, right? Or it can go even lower over here, right? So if the price bounces aggressively from here, if you see a lot of volume picking up, if you see a lot of volume picking up, we're still at rather low volume. If you see a lot of volume picking up from here, you can go ahead and allocate more of your percentage of however much you plan to buy and allocate it to here. Because this, we do not know if we will exactly hit it. I hope we do, because that'll be a great opportunity to bag up even more ripples at a significantly lower price. So yeah, remember to lay your orders, ladder your orders all the way down to here, and these three, around these 3 green boxes. These are significant levels for buys, and make sure you don't buy at a single price point, right? Because you would just be gambling. You would want to ladder all your buys across these levels, so in the end, you get an average, a best average base price, right? Okay. Now, after we buy, where do we sell? Where do we aim for? Now, assuming we could apply the Fibonacci retracement tool, right? Since this would be the top, if I were to draw a line here, this would be the top, right? And let's just say we go back to the previous bottom. Let's just be more conservative. Let's just say we go to this bottom and previous low, and we don't touch the lower trend line. In that case, we might shoot for a short-term target at 1.4 and 2.3, right? These would be the target, right? Or 2.7, right? And you might save like 10% of whatever you buy and just hold it for the long term, right? Or even more, because Ripple is a solid project, right? It's not shitcoin. So this is if we don't touch the lower trend line. What if we do? What if we touch the lower trend line? Again, it's the same thing. You just apply the Fibonacci retracement tool again, except for this time, you trace it down to here, right? In that case, these would be our targets. So anyways, the targets can be determined afterwards, right? We don't have to think about the targets at the moment, because we just have to close our short for now and open our new long position. And whether or not, where our long positions targets will be, we can figure that out later. So yeah, that's it for now. And it's in a bullish market, it's you make money easily being the bull, right? You make money easily at buying and holding. In a bearish market, it's the same thing. It's literally the same thing, but you do the opposite. You be the seller. You be the bear. So yeah, know that you're in a bearish market. Be the bear. Don't be the bull in this case, because you're going to lose a lot of money. And yeah, good luck trading, guys.